300 points lower for the Nifty 50 and 2.5 lower for the Sensex as well. Jyotivardhan Jaipuria joins in as well, founder and CEO at Valentis Advisors. Jyoti, painful times, yes. My question is, are you staying put as far as buying goes, or are you selectively even nibbling?
We are selectively nibbling because we have been sitting on cash levels. The markets were looking expensive, and so to that extent, from a valuation point of view, this has provided a correction which hopefully will make markets look a little more cheaper and provide better buying opportunities.
Okay. Jyoti, just wondering, is this a factor of bottom-up valuations which are looking attractive on specific names, or do you reckon that the damage due to the coronavirus scare now has in part played out and therefore may not be too severe going ahead? Are you taking that kind of a call, or is it largely bottoms up?
No, what we are doing is just nibbling a bit. It's not like we're putting all our cash to work. So there are 2-3 issues. One is, I think the impact of coronavirus is unknown, uncertain at this point, because it seems to be, expanding at a pace which people didn't think would happen a few weeks ago. At that time, it was all like this is largely contained into China, and now it just seems to be spreading all over. So to that extent, the impact is not known. How long it can last is not known. I think what we can make out is, at least for the next few months, the global economy and economies across the world will be subdued, because I guess normal trade is going to come to a halt. People moving across countries is coming to a halt. So that the economy will be subdued. Second is probably now this means that the Fed, which earlier was expected to be on hold, will at some point start easing again in a bit to keep the economy going. So that would be a bit of positive for the market. Ultimately, over the next few weeks, it will depend on the severity of the spread of the coronavirus, how quickly it spreads, or whether it can be contained, which will determine where markets really go.
Okay. Jyoti, in light of that, is asset diversification, asset class diversification a prudent step right now? You have gold, which is hitting new highs, versus equities, where right now the fund money is moving out of. So, and considering that you were not fully deployed at the peak, you still have some spare cash lying around, that would be better worked around in something like a gold?
Okay, so I'll look at it in two ways. One is, for us particularly, what we have is money which can only be put in equities. So our choice is to keep it in cash or invest it in equities. We can't do other asset classes. But for the investor in general, I would say at any point of time, they should have asset allocation in mind, because all these things, like today when equities are doing badly, it seems like gold is a great bet to have, but it's something which you should do across your life, because you don't know at what point equities do badly or some other asset classes do badly. So there should be some asset allocation always which you have, and you should spread your money into different asset classes.
Right, so asset allocation is something that investors can look at. Defensive as a play, Jyoti, some money to defensives just to protect a little bit of capital?
Yeah, so if you look at the last 10 years, it's all been about defensives. Defensives are the one which have done well, and we were sensing that tide is turning, and things are going to move more towards value. So if you see the last 6 months, and even after the current falls, it's like the non-defensives which have done better. Actually, mid caps have outperformed the large caps over 3 months and over 6 months, because we were starting to see defensive had become too expensive, and the valuation at the other end had become very cheap. So we were starting to see that trend moving. With what has happened over the last few weeks, I think that trend will stall. But if you ask me over the next 3-year view, I would still say that defenses are very expensive. That's not the place to be. In a very short term, as a tactical play, probably that is where you want to hide, I guess.
Jyoti, are you even remotely thinking of buying any global cyclicals right now because of valuations?
So Yeah, so we're watching them. If you look at global cyclicals, they are not as cheap as they were 4 months ago also. So what we saw is a very, very sharp rally in a lot of the steel stocks. And, they've come off from the peak, but they still not reached the level they were, a few months ago. We typically tend to buy global cyclicals when they are very cheap, and then we just wait for the cycle to go up. So, if you see a lot of the steel stocks in India, they tend to bottom out around a price to book of 0.5 to between 0.5 and 0.6. So that's the sort of levels we always look at. If we get levels coming closer to that, then we buy them, even if things are looking very bad for the cycle in the next few months, because these are cyclicals. You tend to make your money when the cycle turns, but it's very, very tough to predict the cycle. So they have become cheaper. They've not yet come to the levels they were 4 to 6 months ago. But if we get somewhere close to that, then we would definitely be looking to buy them.
I just wonder, Jyoti, at least one small question from my end. There are a bunch of companies which did very well in terms of numbers for quarter 3. The predictions for quarter 4, despite coronavirus fears, were very strong. And we can't quite predict what will happen post quarter 4 any which ways. And although those stocks have also corrected, would you believe that it might be a prudent idea to try and look at those earnings forecasts and try and buy into some of those if you indeed want to buy something?
Yeah, definitely. So, from our point of view, it's always trying to look at what is doing well and which is, relatively not priced by the market. Typically, when correction like this happen, everything tends to fall because a lot of people are booking profit on what they've made money on. So quite often some of the stocks which are doing well also tend to fall simply for that reason. From our point of view, times like these are just times to sit back, look at fundamentals and try and think, is this going to get affected by the events around the coronavirus, or is this not getting affected? If this is not getting affected, or relatively it's getting affected less, then we tend to buy those stocks. So it is time, these are always times to buy. If you look at the last, this has been a 10% correction, the S&P, which is the fastest on history. If we look at the correction which was prior to this in 2018, that was at that time the fastest 10% correction. If you had bought that 10% correction, 6 months later, you were probably, making decent amount of money. So it is like, you get in at those panic points, you don't know what will happen. 1 week later, you probably are down 1, 2%, 3% even after that. But maybe 3 months, 6 months later, unless things have really blown up, you probably have made some money. So that's why it's always good at some point to keep nibbling a bit. You'll never catch the real bottom. But, just buy stocks where you think the next 1-2 quarters are going to be decent in terms of earnings growth and the outlook. And, things will revert back to mean once, globally things start to stabilize.
All right. Jyoti, what would your EPS estimates for revised EPS estimates be now? Because this is obviously going to, in a way, affect projections. Do you feel that there could be a meaningful cut in EPS estimates?
Frankly, I would say that at the moment, everything's in the air. Nobody's really sure whether this, maybe we're into April and everybody's hoping once the heat starts, then the impact of the coronavirus dies away. If that is the case, then the impact would be, very small. But if that does not hold out to be true and it continues to last for quite a few months, then I think the impact would be quite severe. So, I think the impact will come from 2-3 issues. One is the fact that the global growth is going to slow down, especially because China is going to slow down. The second worry which I have is the disruption which happens because, the supply chain from China is clogged up. The positive news we are getting there is factories are restarting in China. So there is a move that maybe, 2 months later we'll not be as worried about the supply disruption. And third is a lot of, travel related, leisure related, those sort of companies will start struggling because now nobody wants to travel, nobody wants to hold conferences. So, there'll be an impact of that. Overall, I think, we'll probably be mentally thinking that EPS cuts are going to be 2-3% in terms of the growth rate, and hopefully it won't become larger than that if, things start to normalize by the summer.